Welcome to Trading Lounge and the Bitcoin report for Wednesday, September the 1st. We're going to have a look at the bullish count and we're going to have a look at the bearish count. We're looking at this particular crypto here because this particular pattern that it made on the low down through here proved to be a bullish pattern because it took out the high here. So that means that logically the miners and Bitcoin, they could all do the same as well. This particular move up through here, though, of course, let's just have a quick look at that. So we'd be looking, this is really doing a bit of a dance at the at the 100. Normally when I find that it doesn't stop at the level here, normally, and it goes straight through like that, normally the distance above will be the distance below. If we looked at this as 1 and 2 in here and 3 and 4 and 5 here, and then we also looked at this as 1 and 2 here because that's lower than that one there, that would be the logical first step. But I haven't pulled this apart, but just a bit of a thought for traders that are in there. So the 38.2 would be back at, say, 88 at that point. So this market can pull back to that 88 as a wave 4 before moving higher in this. And it may, anyway, you get the picture. This may also be a wave 1 here as well, wave 1 and 2 and 1 and 2, possible because we don't really have a 5-wave move down here. Anyway, the takeaway is that this pattern here can be a wave 4 because it's made a new high at that particular point in time. So coming to Bitcoin here, we're going to have a look at the bullish count first. Okay, so in that regard, this low here could be here or it could be here. Okay, that's something that's debatable here. So if we just start with here, then we have 5 waves to the upside. That's logical, isn't it? So in this case, that means that the 38.2% retracement level for this, taking that to there, would see the market pull back to its 50-60%. That would be logical, wouldn't it? After 5 waves, you get an ABC correction. It doesn't have to pull all the way down there. Secondly, if this 5 waves here was with wave 4 over here, and then we've got wave 1 here and wave 2 here, for example, that would probably need to go onto that high there. A lot of the cryptos have made 5 waves up in this move, by the by. That would leave wave 3 here, and that means it would be coming back for wave 4. So that means it would be coming back to a 38.2% retracement level there. So just looking at both of these and just being sort of fair. So that's the wave 4 of 1 lesser degree just in there. And that's the 38.2%. So it's possible to look at it like that. So that's 2 ways to look at it. Okay. The other way to look at this, I think I've got on the 4-hour chart here that count that, like I've always had, pretty much for this, but depending on where you want to call the low in. But I have changed the degree of structure here, but you could look at it as wave 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2 here. But as I've mentioned a few times, if this is all of group 2 here, so we go from 45,000 to 48,000, and then we look at, when we're talking about number 8, we talk about group 2, which is 65, in this case 46,500 and 47,200. That's group 2. So obviously the market's being held within group 2, and that's a positive thing, because when we're normally working with a major level, it will be group 1 above, which is 51, 52 and 53. That normally holds that would be the natural swing range for that number from this point to this point. If the top here became the support, then it would be leaving this number. If this became the resistance, then it would be leaving this number to the downside. That's what we use group 1 and 2 for. So the 46,500 has been also the 61.8% roughly from this low to this high. So it's always been a little bit sort of contentious. This move down through here, as you may know, that counts in 5 waves here. And then we've got a correction to the 61.8%. And then we've got another 5 down here. So we know that's corrective at this point. But however, we can also look at this too on the bearish side, which we'll get to with wave 1 over here, and an A and a B and a C wave for wave 2 over here. So that's also possible. as well. So we'll be looking at that with the bearish thing. As I mentioned when we came up to the 50,000, it's going to be very emotional. There's going to be lots of different counts, and everybody's going to have opinions, but we need to be as steady as we can, and we need to be patient and build like with evidence as such. So I've just been putting together, over this period, just been putting a case together for being bearish and bullish in this. Of course, my trade setup at this 50,000 would be the classic trading levels pattern. If that's the 50,000 across here, I would expect the arrival, the reaction where we are now. And it may fail from here and never come back or go down much further or whatever. We'll look at that. But I need to see the first high above the level, and then the market normally rolls back over, and then I'll normally pick it up here. So normally I'd trade to the level here, get out, and then get back in over here, and kind of miss all of this in the middle here because it's always emotional. And 5 is the second strongest number, so the 50,000, a major trading level 5. It's going to be a strong resistance. We know that there is supply over there, from before, from the old tops over there. So in this case, we could look at it as wave 1 and 2 and 1 and 2 to the upside. It's probably not the case because this move here is wave 1 here, which counts as 5 waves. You can do that. It's a little bit hard to count this as wave 2. You can go an A wave, a B wave, and then 1 and 2 and 3 and 4 here that overlaps 1. This is okay. We can soak that up. And then down from here. So that basically that low needs to stay in place. But we're working with the 46,500. That becomes the retested resistance. You know that there's a problem at that point, okay? What type of problem and where can that come to? As I've just mentioned before, if we go back to, go to this chart here, there's a couple of things that we can do here. We could have this, as I mentioned before, as wave 3. So this would be an A wave, a B wave, and a C wave coming to the wave 4 of 1 lesser degree, or the 38.2% retracement level. If you want to look at this as wave 1 up here, which is doable, then wave 2 would come back a bit deeper. Quite often though, wave 2 can come back to the same level as wave 4, especially if there's a lot of interest in the market. So that's the bullish side. As I just mentioned, the classic trading level pattern for me to be bullish really is, and I've said this before we even got there, is that we want to see the arrival, we want to see the reaction in 3 waves. We want to see 5 waves up for the first high, and then we want to see an ABC pattern here. And it's at this point here that tells me that we're bullish. It's as simple as that. But it's just, there's a lot of complexity in something being simple, as we all know. So that's the bullish case, guys. That's all I can think of for being bullish. So, if it does come down here to wave 4, I won't know what it is. I won't know if it's a bear market, coming past all of this. But if it comes to this area or this low over here, we'll have a look at the structure. And if we think that it makes a nice wave C and it's finished at that point, well, then we'll need to confirm that with an impulse wave to the upside. And if it slips lower, then we can look at this wave 2 scenario. We'll have a look at what the structure is down to this point, because the wave 2 should be, I don't think it's a wave 2 because, it could be if we put the wave 1 over here, but a wave 2 is a zigzag. It's a 5-3-5 structure. It's very simple, where wave 4s can get more complicated. So if this gets breached, we could just push straight up from here, okay? But if this low gets breached here, then we're looking wherever that is, not a very straight line, and we go. We can come down to this little level here, to the wave 4 of 1 lesser degree, and we'll have a look at that structure. But we still need an impulse wave, 5 waves up here, to help us confirm that we're going to get, the pullback and then move up there further. So we can look to go long at that point once we've got that confirmation. Otherwise, we're down here. Or worst comes to worst, we come down much further, coming down into the bear market side of things. So I'm going to look at that now. And I don't think it's, it's okay. Just letting your opinions get in the way of things is not always good. Because it's kind of like sticking your head in the sand a little bit. You have to, you need your own rules of life to live, don't you? And you develop those over time. and you know, they become your moral code. And you know, you need rules in the market as well that you need to develop over time. They don't come instantly. It takes, you know, you have to do your 10,000 hours if you're lucky. It's that small. So this would be a logical count too. So wave 1, 2, 3, 4, and 5 down here, then the A wave, the B wave, and the C wave here, and diminishing wave structures up here for all of that. So it is possible for this market to come down through here. You know, all of this bear market here is really quite a small amount of time compared to the 2017 bear market, you know, and all the others. You know, there's 13 of them, or a good dozen anyway, and they've all pulled back a long way. But you say, you know, we all say it's different this time because the commercials are in there. And, you know, when you look at chain analytics, you're right. There are institutions going in there. It's not the retailers now, it's the institutions that are sucking it all up, you know. And I mean, they're beyond the hedge funds as well. I mean, they're taking some, and you know, and small. But we're talking about the big fish, you know. So yeah, there is a change. I understand that, but human nature is human nature. It was like when I remember when computers first came in, and I started in 1982, and we're talking about Elliott Wave. Would the computers change, you know, the Elliott Wave count? No, but it didn't, because there's still humans behind it. So it's all still human nature, whichever way you look at it. So the bearish side is this, and let's go in and go for a little journey and have a look at it in a bit of detail. So let's go into this here. So this is just an 8-hour chart. So with the A wave here, the B wave here, 1, 2, 3, 4, 5. I know you've all seen it before. And now we're looking at this. This green line here is the 46,500. And this line up here, the 55,000. If the market got above that for support, then I'll be on the long side as well. But yeah, this is where it is at the moment for this market. And just to get a bit more detail and drill in here a little bit further, this is just a 6-hour chart. Nothing special about these time frames, just gives me a bit of space to work, that's all. So in this case here, we could look at this down here as wave 1. I've seen this sort of thing before. And then an A wave and a B wave and a C wave for wave 2. And then that would put us down for, well, wave 3 or wave C for wave 4. Do you know that corrective move that we're looking at? So that's possible as well. Right? They're all possible. Yeah, so that's that. Let's just cruise in a little bit further and have a look at it a bit further. I think we were looking at this one yesterday or something. So with wave 1 here, an A and a B and a C wave for wave 2 coming into this high here, and then looking at this as wave 1 here and wave 2 here, and then wave 1 here and wave 2 here, and then wave 1 here and wave 2 here, and then wave 1 here and wave 2 here, and then breaking that low. That's the way I'm sort of looking at it. So I'm going to continue in there for this. So it's a whole series of all of this is if it's the top, then all of these is the, you know, and to see these 1s and 2s and 1s and 2s and 1s and 2s, I mean, that's a pretty big significant situation going on here. So for the bearish side of things, you know, so there'll be, you know, there's a lot to unwind further down for all of this. And once this starts here into these wave 3s here, you know, it's going to go pretty quickly from once this low becomes the resistance, it will drop to the 5 real quick, and it will hover here for a while because there's history and the number 5 and all that sort of stuff. So let's just cruise in a little bit further here for this. It's just I'm putting this up here as a 1-hour chart, and so the top with wave 1 ABC for 2, 1 and 2 and 1 and 2 and 1 and 2, and we're looking for 1 and 2 in here and going into so a little bit more detail. So we're going from 2 to 3 to 4 to 5 to 3 here. So 1, 2, 3, 4, 5 coming further down in that regard, and this couple of wave 4s playing out, which will suit nicely for this 45 area through here. And then we can go into the tick chart, 100 ticks, to just drill in here even further. Will 15K do the trick? Just about. We'll just get a little bit more. So our wave B at the top here with 1 and 2 and 3 and 4 and 5 for, well, for wave 1 here. We can call it, I've got the bullish count here as well, but don't worry about that for a moment. So wave 1 here and wave 2 over there. So then this is the important bit here. So wave 1 here, ABC for wave 2, 5 waves down here for wave 1, and back for wave 2. And you can see how fast these ones are dropping, you know. So wave 1 here, bit odd this wave 2 pulling back to here. You could probably count that in different ways. It wasn't that simple. And then looking down for that wave 2, and then looking at this as down for wave 1 and back for wave 2 here, and then further down as wave 3 and 4. So if, for instance, that, so that's the bearish side. So what I could say to you today is that looks like if this low was taken out here, then would probably be help confirm being bearish, but we're not going to do that. We're just going to use the 46,500. Now, if this was going to be bullish, let's just imagine for a moment that, let's rearrange this. Let's rearrange it that we put, let's just say that this move here is wave 1 to the upside, which would make, as long as that low stays in down here, that could be wave 2 at that point, couldn't it? So then we would need an A wave, a B wave, and a C wave here. And we could look at it, well, we could put the A wave here, the B wave here, and then we'd have, and the C wave, oops a daisy, the C wave down here for that. Right, because that would be wave 1, 2, 3, 4 here. Yes, 4 overlaps that top there, but if you want to be bullish, how else would you count it? And then 5 waves down through here. So it can come down to 1 point below here, but that's what I say, that 46,500 that I've been harping on about for 2 weeks, you know, that's really the line in the sand. So that would be, I suppose we could look at this as, if we're looking for wave C here, we could look at this as 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave. So we could make another low here, but we just wouldn't want to go too low with this. We wouldn't want it can't take that, can't take these lows out. I mean, this is just a CFD platform, so I wouldn't trust those lows. You'd want to go to bitmap or something. So yeah, also on the bearish side of things, the market can rally to that point, and then thereabouts, because, you know, all of these have been pretty good in their retrace. Well, it's been a bit high, but I'll probably overshot. It's probably about there. Anyway, it doesn't really matter, but something like that. So yeah, we've been working this for, you know, a little while now, all of these 1-2s, and you know, is this correct coming down through here as 5 waves? Well, I don't know. Let's, you know, first of all, we need to breach this number here. That would cancel out this wave C of 2 here for that. Okay, and if that was breached, then we need to look at wave, you know, that wave 4 go back to the other chart. So we'll just go there and go back to this. I think I had it on the 3-hour chart. So now, you know, with all these 1s and 2s, if this low here is breached, we can just, what we should do is just dump that and just get a bit more professional. So in there, if this low is breached, then you have to look at this low and a little bit lower for this wave 4, or possibly this. So it's kind of, they're the lines in the sand. You know what you're up against, and yeah, so that's that. Let's see what happens. Let's see if we bounce back up from this low. I mean, there'll be, you know, obviously there's fantastic support across this level here. So it's not long now before we see what happens. What do I think? I don't really think much at all, actually. You know, I just take the next logical step for me, that's all. So we'll just see if this gets breached, you know. As you may know, I've taken my Bitcoin out and put them into THETA. And if I see a good bullish case, maybe I got out too early, maybe I didn't, but I didn't want something happening to me overnight, you know. So I didn't want this being breached while I was asleep, so to speak. So yeah, I mean, but I will enter back in, you know, when I feel that's appropriate, you know. I mean, I have been, I've got every time you see a little blue thing here, they're all my they're my entries, you know. So you know, so I started scaling in sort of way back here. So I've been building in all the time here, you know. So, you know, just to stand aside at a point of risk here, I don't see the big deal, you know. I see it kind of, I see it okay. I don't see it as an intelligent thing. I don't see it as a dumb thing. I just see, well, if that low gets breached, well, then we're going to be coming down further. So that means that I can buy more coins at a lower price if that's the case. And if I'm wrong, well, I'll lose a bit of pocket money and I'll be back in. So, you know, I mean, it's not leverage and it's not rocket science. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.